Supermicro seeks $7 billion for server hardware. Suppliers of high-bandwidth memory are already seeing allocation fights. Locking up $7 billion in fresh capital lets Supermicro prepay for substrates and avoid the 30% spot premiums that hit last quarter. The move squeezes every other server assembler on the same foundry queues. Expect Foxconn and Quanta to shift capacity toward consumer electronics instead, leaving enterprise orders with longer waits into 2026. That timeline now collides with the next wave of AI cluster refreshes. Zepto files for IPO, raising up to $837 million. The filing reveals that losses widened even as order frequency climbed past 5 per week per user. Fresh capital from the offering will mostly fund warehouse expansion in Tier 2 cities, yet the real pressure lands on delivery partners who now face tighter incentives. Blinkit must decide whether to match Zepto's density targets or cede those markets entirely by mid-2026. Early backers' selling plans will reveal how much they still believe in reaching break-even before the next funding window closes. Helion hits $15.5 billion valuation with $465 million round. Thrive's check puts pressure on every other fusion project to show hardware milestones within 18 months or lose their own term sheets. The manufacturing build-out in the US will consume specialized capacitors and vacuum vessels that only a handful of suppliers can deliver at scale. That allocation leaves TAE Technologies and Commonwealth Fusion Systems queuing behind or paying surcharges. Expect their next rounds to carry heavier dilution once Helion's production timeline becomes the benchmark for investors. Alta Airways raises €50 million for counter-drone hardware. Production scaling now targets 200 units per month by next summer once the new lines come online. The round gives Alta Airways enough runway to qualify its systems under NATO procurement rules, which most national defense budgets still require. That certification path forces competitors such as Dedrone and Battelle to accelerate their own European testing or lose standing orders from Germany and Poland. Watch the margin impact from added compliance overhead once integration with existing radar networks begins. Unveils 2 new drone models. The 2 models split the payload and range trade-off that previously forced operators to choose between reconnaissance and strike packages. Defense ministries can now standardize on a single vendor for both missions, cutting certification and training costs that previously favored incumbents like AeroVironment. Stark's production partners must now retool lines for the higher volume the combined fleet will generate. Smaller drone makers lose their wedge in the mid-tier segment as procurement offices consolidate around fewer approved platforms. Steno Wix plans 1,000 job cuts, 20% workforce reduction. Wix's previous hiring spree left overlapping product teams that now compete with automation tools it already sells. Cutting this deep suggests the company is preparing for slower growth in core website builds rather than fighting every no-code rival head-on. Agencies relying on its white-label services will see support queues lengthen first. That opens the door for Webflow to capture design-heavy clients before the next budget cycle. Smaller teams may also deprioritize custom integrations, accelerating churn among enterprise users. Google Cloud lays off staff across multiple teams. Security teams inside large enterprises just lost a direct line into Google's internal threat data following these targeted reductions. Mandiant's integration work now stalls at a moment when ransomware groups are targeting cloud workloads more aggressively than last quarter. This leaves gaps in the threat intelligence reports that Google sells to its cloud customers. Expect CISOs to accelerate evaluations of CrowdStrike's Falcon platform as a replacement before their next audit cycle closes, potentially shifting spend away from the Google ecosystem. Chinese startup advances photonic chip production. The 90% cost reduction targets the interconnect bottleneck inside AI training clusters first. If yields hold at scale, hyperscalers may divert orders away from traditional silicon photonics suppliers like Intel by late next year at the earliest. This approach bypasses export controls on advanced lithography, but still requires validation from major cloud buyers. That shift would strand existing packaging lines and force equipment makers such as ASML to retool their roadmaps around nano imprint rather than EUV extensions. SK Hynix to double memory wafer capacity. Doubling output over 5 years assumes demand from AI servers stays linear, yet current HBM shortages already show that assumption may be optimistic. Samsung must decide whether to match the build-out or cede more ground in the DRAM market that funds its foundry push. Suppliers of wafer fab equipment will see orders concentrated with fewer buyers as a result of the capacity race. The move also risks oversupply in standard DRAM if AI demand plateaus sooner than expected. DDR4 memory production restarts amid shortages. PC OEMs turning back to DDR4 signals they see no near-term relief on newer modules priced at a premium. This delays the refresh cycle for motherboards and CPUs that require DDR5, giving used server parts a longer runway in the channel. Memory makers with older fabs gain a temporary reprieve but lock in lower margins for the next 2 quarters. Intel and AMD both see slower platform upgrades as a direct result. Apple shares drop after WWDC product updates. Investors priced in bigger software monetization that never materialized in the demos. The updates failed to move the needle on iPhone replacement cycles, which now stretch beyond 40 months for the installed base. That lag hits component orders first. Suppliers in Taiwan already see softer demand signals for the fall refresh. Apple will need to lean harder on India manufacturing ramps to offset margin pressure. Foxconn may shift capacity to Android flagships by early 2025. Moment Energy raises $40 million for EV battery systems. The $40 million round buys them 2 years at current burn, yet the Gigafactory commitment now locks in lithium supply contracts that competitors must renegotiate. The real pressure lands on used battery acquisition costs, which jump once the plant scales. Automakers with take-back programs will face higher bids from Moment's procurement team. This squeezes margins for first-life pack makers who planned on free returns. GM and Ford must accelerate recycling partnerships before 2026. Sarah eyes $12 billion valuation in new funding round. The 5-month valuation leap from $9 to $12 billion masks the clause that hands data rights to investors for resale. That term now forces enterprise customers to audit their own contracts with Sarah before renewal. Smaller security vendors lose the ability to bundle storage monitoring once those rights trade on secondary markets. Sarah's sales team gains leverage in deals, but only until Varonis or Big ID replicate the structure in their next rounds. Banks will insert data use restrictions by Q2 to block resale. Intuit cuts 3,000 jobs in 17% workforce reduction. 3,000 roles vanish mostly from the TurboTax and QuickBooks support lines. The remaining teams now carry targets tied directly to AI feature adoption rates inside the product. That shift compresses the window for third-party tax prep integrations, which must now prove higher accuracy than Intuit's internal models to stay listed. Third-party developers lose priority placement unless their tools exceed the new benchmarks. H&R Block must match feature velocity or lose App Store shelf space by 2025. Meta targets additional headcount reductions. The additional reductions target mid-level engineering roles that supported the Reality Labs transition. Those cuts redirect roughly $2 billion in annual payroll toward data center expansion in the US and Europe. Smaller ad platforms relying on Meta's cloud credits will see their effective rates rise once the new capacity comes online. That margin squeeze hits hardest at companies without their own silicon, pushing Snap and Pinterest toward acquisition talks with larger cloud providers by late 2025. Oracle eliminates at least 10,000 positions. The real test comes when sales teams try to defend renewals without the bench strength they had last cycle. Microsoft can now target Oracle's mid-market accounts with bundled Azure deals that include migration support Oracle can no longer staff at the same level. That pressure will show up first in win rates for hybrid database deals. Enterprise buyers notice the change first. Watch contract negotiations through the end of next fiscal year to see which side captures the displacement. Snap reduces workforce inefficiency drive. Reduced engineering capacity will delay fixes to Snap's ad attribution tools that brands have complained about for months. Meta stands ready to absorb that spend with its Advantage Plus campaigns that require less manual optimization. The efficiency drive improves short-term margins but risks accelerating user decline if content ranking suffers. This forces Snap's remaining product leads to prioritize revenue features over user experience updates. Brands will test smaller test budgets on Snap before committing full allocations next quarter. Groupon slashes 400 jobs, 23% of staff. Merchants lose dedicated account managers in the cut, pushing many to move their promotions to newer marketplaces that offer better terms. Groupon's remaining staff will handle larger portfolios, which typically leads to slower deal approvals and higher merchant churn. The restructuring may stabilize costs, yet it hands competitors an opening to capture the local advertising budgets that were Groupon's core. Expect merchant retention numbers to turn negative within 2 quarters. Dropbox cuts 528 jobs in second layoff round. Customers will face longer wait times for support tickets as the cuts target customer success roles. This pushes IT departments toward Microsoft 365 bundles that include OneDrive with better SLAs already in place. The efficiency gains come at the expense of the premium support tier that justified higher pricing. Box gains a window to pitch its admin controls and compliance features to the accounts just weakened. Renewals will reflect this within the next contract cycle. Block eliminates roles in ongoing restructuring. Fintech startups relying on its payment infrastructure now have fewer dedicated integration engineers to call. Stripe can use the gap to accelerate its own onboarding programs and lock in those developers before Block rebuilds capacity. The restructuring improves operating margins but exposes the company to higher churn among smaller merchants who need handholding. Block's next developer conference will show whether the platform momentum holds. Expect integration partners to hedge with multi-provider setups starting this quarter.